Hey everyone, just had an exciting conversation with Kyle Samani, who's a co-founder and managing partner of Multicoin Capital. We covered many matters, including early investment in Solana, the EOS flop, DePIN with its pioneers Helium and Mapper, and many more Web3 landscape fundamentals. Just a quick disclaimer, nothing in this conversation should be considered an investment, tax, legal, or other financial advice by either Kyle or Multicoin Capital. Thanks for tuning in, and let's jump into the video. Thanks for joining us, Kyle.
Hey, Leo, pleasure to be on the show. Thank you for reaching out and excited to be here and dive into all things venture investing in multicoin and crypto.
Lovely to hear. Although you're very well known in the industry, could you share your crypto story with the newcomers to the space? What nudged you towards Web3?
Sure. So my last startup ultimately didn't work out. We were building software for Google Glass for surgeons. And after that kind of wound down, it was the end of 2015, beginning of 2016. I started fiddling around and trying to figure out what I was going to do next with my life. And one thing that I kind of ended up doing during that time was fiddling around with some of Stripe's APIs. Even in March of 2016, Stripe was a pretty hyped up company. I went to the website, went to the documentation. I was generally pretty unenthusiastic. All you could really do with Stripe's APIs was take a credit card payment. And I was kind of surprised. I was like, why is this company getting so much hype for what I, at the time, didn't think about being that sophisticated of a concept? Fortunately for me, a couple weeks later, I ended up learning about Ethereum, started looking at the SDK, fiddling around with Ethereum, and it became very clear to me very quickly that Ethereum was infinitely programmable or permissionlessly programmable. And although at the time I could not articulate what DeFi would become, I think that first seed of an idea of what would become DeFi became planted very quickly. And that got me very excited. You know, I had studied finance, and when I kind of that light bulb moment went off of, oh, wow, it's a single system, a single unified environment, and I can program payments, I can program stocks, bonds, commodities, whatever. I can have all of these things work together. That struck me as a very important concept. And so once that dawned upon me, I started kind of going down the crypto rabbit hole in 2016, made the decision to launch Multicoin in May of 2017, and we launched our hedge fund on October 1st of 2017. So that fund is 25 quarters old now.
What was the most exciting use case of blockchain for you then? And how did your view change to the present day?
I mean, the thing I was most excited about was payments, because it struck me as like a much better way to do payments. I'd say over the last 6 years, my interests have changed into first into DeFi, then into things like DePIN, and actually weirdly I've come full circle. And the thing I'm most excited about now is payments. I can say with a high degree of confidence that the vast majority of on-chain transactions will be payments, and that's exactly what I want to see.
Right. And in your view, especially like from the payments perspective, can crypto become an equivalent or alternative to current financial system? And what else is needed to get there?
In one word, yes, it can. It's going to be heterogeneous across countries just because there's different norms and processes in different places. I think the probability that, Visa and MasterCard go away anytime soon is extremely low. But I do think there's a really good probability that Visa and MasterCard will start using things like USDC on Solana to settle payments to merchant acquirers and to merchants. Visa has already started this as of a few months ago, and I generally expect them to ramp that up. I think there's going to be lots of other kinds of payments that take place over crypto rails. Obviously, in the US, we tend to think about Visa and MasterCard mostly, but there's going to be many others.
Let's jump into Multicoin Capital's investment journey. What was your investment strategy in the early days? You were bullish on projects like Helium, the Graph, EOS, Solana. Why did these protocols make you excited?
I mean, I don't think our core theses have changed much. They've probably been refined a little bit over the years, but we have them on our website. We call them our mega theses. Our approach has not changed too much. We continue to make fairly concentrated bets. We continue to look for entrepreneurs who think differently and who are generally not going with just what's kind of the current narrative. And so that hasn't really changed. EOS, Solana, we talk about those two investments oftentimes in the same breath. And the reason is they represent kind of the same thesis in some ways. You know, I got into crypto in March of 2016. At that point, Ethereum was about 9 months old. We launched Multicoin in October of 2017. DevCon 3 was in Cancun in November of 2017. I remember it very vividly. I went to DevCon, and you know, this is November 2017. All eyes are on Ethereum. Ethereum is up 100x in the liquid markets year to date, and everyone's excited about smart contracts and all the ICOs and all this nonsense. And we go to, everyone's excited for Vitalik's keynote. There's a lot of expectations that he's going to unveil kind of a big plan for. At the time, people were expecting sharding or plasma or something, but just, you know, to give everyone a more concrete proposal for what was going to come for Ethereum. And in that keynote, he did absolutely none of that. He didn't even attempt to lay out a roadmap. And at that point, that was my first like crack in Ethereum. I had been following it for a year and a half, and it was, you know, 2.5 years old at this point. And since the inception of Ethereum, they knew that they needed to focus on scaling. There's many blog posts going back to even prior to the launch of Ethereum talking about various scaling ideas. And as far as I could tell, there was absolutely no tangible progress made towards that. And so that's when I began to wonder and say, okay, you know, are there other approaches? Should we think about other things? What else is out there? EOS was really the most credible alternative at the time, and very much represented a very diverging view of how to think about blockchains. EOS ultimately did not work out for many forecastable reasons that we failed to forecast. A lot of people told us there was core problems in the system. Our view was those would be able to be overcome. They were not, and the system ended up flopping over the course of 2018. However, our core thesis was not particularly invalidated, which was A, that Ethereum didn't really have a plan, and B, that you should explore a focus on engineering rigor and optimization. We had the good fortune of meeting Anatoly and Raj in April of 2018 and got to invest in the first round and then ended up leading the following rounds from there. It certainly has not been an easy story. I mean, they almost died at the beginning of 2020, and it has been many ups and downs, but it's been a very exciting story. Helium and Graph, you know, very, very different investments. When we met Yaniv, who's the founder of the Graph, at the time, there was only really one major RPC provider for Ethereum, and that was Infura. I fiddled around with Infura, and we're not particularly impressed with how they were approaching things. Yaniv had a very strong background in databasing and indexing and query systems, and we felt like, hey, this guy, he gets it, he understands the opportunity, and went for it big. Very, very great to work with him. Helium is probably the weirdest of the bunch, because it had this hardware component, it had this DePIN thing. DePIN, of course, was not a term back in. We invested in May of 2019, but you know, Amir pitched us this idea of like, look, like we can build the people's network. We thought about it pretty hard. We were like, well, what is the point of a telecom network? And the answer is, of course, to have coverage everywhere. And the more we thought about it, the more we're like, hey, this current model of Verizon leasing space on top of a building and running it and building a tower and all this stuff. I was like, wait a minute, why can't you just put a hotspot in your window and like let the free market solve the problem? And you know, the more we thought about that, the more we were like, this is one of the biggest ideas we've ever seen. Every single human on the planet needs an internet connection. And so we got very, very, very excited about that investment, and ultimately ended up leading, you know, Helium's round when they were moving into crypto. There was absolutely no guarantee Helium was going to work. Helium was crazy. There was a huge hardware component. They had to ship hardware. They were shipping, their own blockchain. It was a lot of technical risk, a lot of market risk, a lot of just weirdness risk. And fortunately, all of those things ended up working out favorably. And today, I think Helium is really the torchbearer for the DePIN industry more broadly.
Yeah, couldn't agree more. And as you mentioned before as well, one of the most notable investments you made with Multicoin Capital was Solana. Scalability became a newly founded demand back then, and with Multicoin leading Solana's early stage fundraising in 2019 as well. I would like to ask you to tell us more about your decision making leading up to the investment. Would it be accurate to claim that Solana in particular put Multicoin Capital on the map?
I mean, it's the investment we're definitely most well known for. I think there's a few other steps along the way. We became quite well known for our investment in EOS. Many people in the Ethereum community thought we were clowns because of it. We were also really the first real American investment firm to go long BNB. We initiated a very large BNB position at the end of 2018 at the exact bottom at $5, and called that one, which at the time was very, very controversial among our peers. But certainly Solana, just in terms of magnitude of returns, both in on absolute and percentage basis, is by far the best performer. And so definitely what we're most well known for.
Learning from your portfolio, are there any must-have project fundamentals for you to initiate due diligence on projects? Do you notice any common red flags from the get-go?
We have no universal requirement on anything to invest other than clarity of thesis. That is the primary thing that guides us. Beyond that, pre-revenue, pre-product, number of founders, not all of those are mechanical details. And all of those are flexible given the intrinsic nature of whatever the opportunity is. We have no specific market focus, other than it needs to be enabled by crypto in some way. If we did, then that would have precluded us from doing things like Helium. And I would have felt very stupid if we had been precluded from doing things like Helium. So no real universal things that we can't do. I can say the one sector that we have generally been very skeptical about has been crypto gaming. We've done less there than probably all of our peers by a pretty substantial amount. It's been, call it 2 or 3 years since crypto gaming started to become a term. I feel pretty good about that decision so far. Maybe I'll have an egg on my face 12 months from now. Who knows? We'll see. But have generally avoided the sector, not because we are opposed to it, but just because we haven't seen games that we really think fully capture being like deeply crypto native and all of the components of that. But we continue to look at interesting crypto games and teams working on novel ideas.
Just building up on top of that, what are some of the most common mistakes you observe protocols make?
Most common mistakes. I mean, I think launching a token before you have product market fit is a really, really bad idea. Once you have a token out there and then you're pivoting your product around, it's a real nightmare and a real hassle.
Although many see the influence and power of VCs, they have over the Web3 trends, who and what becomes a hot topic and scales rapidly, quite a few are not convinced with the whole throw capital, at 20 projects, one must stick kind of approach. What is your take here? Do you see any deviations from your fellow VCs regarding the investment model and Multicoin Capital?
I mean, the venture business is about finding outliers, and then those outliers, pay for the ones that don't work out. There's nothing wrong with that. That I don't even understand it's a fundamentally risky way to approach investing, but I don't think anything's wrong with that. I think where that can become problematic is if you've got one VC investing in 7 companies in the same sector. That gets kind of wonky. But is done. And then obviously the other thing you kind of see is there's just a lot of firms that they just say, look, we're just going to invest in anything under some price, call it 25 or whatever. And their only intention is to sell the token as fast as humanly possible once it unlocks. So there's ways, people play that game. Those folks are out there. It's not that hard to figure out who they are if you do your homework. Not the game we choose to play, but, something that entrepreneurs should be wary of.
As you said, many outcomes are possible from an investment, especially in the early stages. Sometimes, even if all the cards are played right, the protocol does not stick. And it may be, a variety of things like wrong timing, the competitive landscape, or simply, a continuous movement of the crypto space. And although unsuccessful return of investment does not mean that the gamble on the protocol was wrongful in a sense, in some cases, you can look back and think, I shouldn't have made that call. Do you have any regrets like that about your investment experience? Any verticals or maybe high chasing moments that drew your positivity up, even if it shouldn't have?
I mean, look, we all look with hindsight's 2020, so it's very easy to say you regret things. There's certainly plenty of investments that we've mid-curved, as we like to say. There's been things that we thought were stupid and then ended up not being stupid and then have kind of come around and are now kind of considered stupid. So, we've been right for the wrong reasons. We've been wrong for the right reasons. It's just funny how crypto works out. Obviously, lots of lessons learned. And yeah, we continue onwards and upwards.
For quite some time, Multicoin Capital has shown interest and commitment to decentralized physical infrastructure networks, otherwise known as DePINs. And in simple terms, DePINs provide an open source way to maintain infrastructure in the physical world. As evident from your written pieces back in 2022 on proof of physical work and a relatively recent article on DePIN networks, Helium was the first leap of trust in the space. What unique features and solutions attracted your attention to Helium back then?
Yeah, so there were a couple of things that really stood out to us about Helium back in the day. The first was what we call the structural cost arbitrage. If you think about Verizon or AT&T, how do they build a telecom network? Well, they go, they map out the city, they figure out where they want to put the towers. They have to call the city, they have to file for approvals. They then have to go rent the land somehow, lease the land. They have to then go and build a tower. They have to run a bunch of backhaul. And they have to pay a bunch of labor to do all of that work. That is very capitally intensive. When you look at Helium, it's you buy a hotspot, you put it in your window in your home or your small business. In the Helium model, you physically remove the two largest sources of cost, which are one, real estate, and two, labor. It's pretty rare that you can look at a large market like telecom that's got, call it $1 trillion of annual spend, and find a way to remove somewhere between 80 and 98% of the cost, depending on exactly how you want to count these things. That's pretty unprecedented. And so just the sheer magnitude of that structural cost arbitrage got us quite excited. The other thing that really got us excited was the understanding of this notion of risk and reward in capital formation. In order for Helium to work, there's some minimum threshold scale of network that you need. Maybe it's 100,000 nodes, maybe it's 400,000 nodes. No one exactly knows that answer ahead of time. But it's obviously not 50 nodes. It's obviously not 10 nodes. It's obviously a very large number. And so that creates a very interesting dilemma, which is if let's say you think that, you heard about Helium, you think it's a cool idea, and you think to yourself, there needs to be 100,000 nodes for this network to be successful. Well, if let's say there's 10 nodes currently deployed, then you look at this and you're like, well, why would I participate? I'll be number 11. But if I need to get to 100,000 before it's useful, that seems like a pretty poor probability. The beauty of the Helium model is that it compensates people for taking that risk. The earlier you are in the network, the more tokens you can earn. And so there was a lower chance it would ultimately work out, but you get rewarded more for doing so. Conversely, if you're person number 200,000 to join the network, clearly you're taking much less risk than person number 10. And so you should receive less reward. And that is exactly why we got so into Helium early, was we were like, wow, this is a very powerful idea. So those were, I think, the two really big breakthroughs we saw in Helium. And, fast forward now, it's been, I guess, 4.5 years since we first invested. And I think both of those assessments have borne out to be correct.
Yeah, and comparably, another successful investment in this vertical was also Hivemapper, a decentralized alternative to mainstream mapping platforms like Google and Apple Maps. And using Helium and Hivemapper as examples, do you believe DePIN protocols can attract mass attention to compete with these traditional monopolized giants like Airbnb or Uber?
Absolutely. There's a huge opportunity at hand to build new kinds of DePIN networks to go after these incumbents. And I fully expect we'll see more DePIN networks in the years to come.
100% agreed. And looking from the technical perspective, infrastructure protocols are always a difficult task, especially when they try to decentralize well-established and widespread networks. What are the most significant struggles you observe with DePIN protocols at this point in time?
I think the biggest challenge is just they're logistically very difficult. You're shipping hardware, you're launching a token network, you're dealing with all the lawyers around that. It's building community. It's just very hard. Most of the kinds of founders who want to launch DePIN networks tend not to be crypto native. Amir at the time we invested was not crypto native. Certainly has become crypto native since. REL from HiveMapper, again, was by no means crypto native. Has since come around and learned a lot about the crypto market. Render, again, Jules was not crypto native, but has certainly learned a lot as we worked with him. So, and the reason that tends to be the case is these are founders who have some domain expertise in whatever field they were in. They understand this kind of core of this DePIN idea without really being crypto native, but that seed of the idea catches their attention, and they realize they can apply it to the industry they know. And so it's very difficult, I think, for a lot of those founders to come to appreciate how to operate in crypto markets. It's just a very different world.
Agreed. And what are you looking, as a Multicoin Capital, are you looking for any specific DePIN solutions at the moment? Is there a gap in the DePIN market yet to be unraveled?
There's definitely areas that we think are interesting. We have spent a good bit of time thinking about decentralized energy. So the idea of you've got a Tesla Powerwall at home, sell it back to the grid, that kind of a thing. We think there's something interesting there. We've spent some time on drones, thinking about like if you're going to have a large scale delivery network, having charging stations in people's homes. One area we looked at this was probably the craziest of them was a decentralized logistics network. So the idea is, Amazon's got warehouses kind of by every major city. Well, what if you could have, let's say, 25 people in your neighborhood use their garage as a fulfillment center for your neighborhood? So we've explored a lot of these ideas. Haven't pulled the trigger on any of those three that I just outlined, but these are certainly areas of interest and intrigue. We continue to look for more really cool DePIN opportunities.
I'm really excited to see how DePIN unravels. I think there's so much potential. And of course, from what we've discussed today, you believe that too. Just as a finishing question, as a wrap up, is there anything you would do differently if you stepped into crypto now at the beginning of 2024?
Honestly, not really. Multicoin, we've always been pretty true to ourselves. We have been, think from first principles. Don't be afraid to have beliefs that other people around you have. And if you believe it, then you should put your money where your mouth is and stick to your guns and go help make it happen. It's very good to write and share your opinions in written format. I think that's an awesome thing, and everyone should do it. And yeah, we are. Those have been a lot of the keys to our success, and I strongly encourage any new investors or fund managers to do the same.
Definitely. Thank you, Kyle, for coming on to the show and sharing your experience and thoughts on the intersection between venture capital and Web3. There are many lessons and ideas to unravel to understand these intricacies of investing. Can you please share how our listeners can follow your work and investment journey?
Absolutely. If you'd like to follow me along, follow me on Twitter, or I guess X now. My handle is just my name. It is Kyle Samani, KyleSamani. And I also encourage you to subscribe to our blog at Multicoin's website. Just go to multicoin.capital, and you'll see the email subscription box right there at the top.
We at the VC Whisperer want to thank our media partner Leviathan News for rolling out the episode. And we have a great lineup coming up with VC founders, fund managers, principals, and general partners ready to talk about intricate verticals in the crypto space. If you enjoyed this episode, please share your excitement by clicking the like button, and be sure to subscribe to our channel to check out our future episodes. Share your guest requests and feedback via the VC Whisperers communication channels and by commenting below. And follow along our journey on Venture Compass as we decode and unveil the gems of the crypto venture capital world. I'm your host, Leo. Until next time, stay curious, stay invested.